Hey, fellow traders. I know it's been quite a while since I posted a video. Hopefully this will make up for it. This is what I've been working on over the last month. I've been talking about it a little bit in my post. It's finally ready to go, I believe. I just got done retesting everything again. So we're gonna basically go over each little area of the calculator and how everything works and set up and how to use it. First things first, when you start out, you are going to basically have some of these values already preset. Just uh, you want to go through these one by one. You're going to have to set up one calculator for each pair that you trade, and you're going to set up the settings that you get from your broker over here. And if you need to change accounts and things like that, we're going to set all of these up just once. And these are going to be used throughout the calculator to make all the other values. Each little section has a help with it to kind of describe what else you would need to do and how to set things up, what the different options mean. But going from the top, you'll start with the pair here, and then you're going to want to select a precision size. This is how many decimals are in that pair. Next is going to be the broker settings. These are going to come from either your market watch statistics. If you right click on the pair that you're trading in MT4 or MT5 and click statistics, you'll be able to find out this information. Swap is also going to be included there. If you're not using MT4, you can basically find most of this information out through your broker's website. A lot of times you can get it through financing or some of their other pair description pages. But for the most part, if you're trading Forex, typically that contract size is going to be 100,000. For leverage, you're going to put in how much account leverage do you have, either 50 to 1, 100 to 1, so on and so forth. That's going to be used for the margin calculations. The next is for your account currency. Now, if you're trading US dollars, and in this case the quote pair is USD, you'll just select quote. If you, for example, were using the euro as your account currency and trading the euro USD, you'll change it to base, and that will adjust your pip value and your margin, so that way you can work with the correct numbers. And then if you, for example, have an Australian dollar account, if you're trading with an Aussie account and you still want to trade the Euro USD, in this case you would select none, and you would have to come over to the currency converter part. And up top, we'll just start out with what is your account currency. And we're going to use the Aussie dollar as an example. And the base of the pair that we're going to trade is the euros, so we'll have to convert our account to euros. And then this is already typed in, but right here you'll see it's going to combine this and tell you what to type in here. You could just type in the letters without the slash or with the slash, but just type those letters in and it will automatically adjust. This way you can get a conversion rate for $1 Australian to euro and get that conversion rate, which will then carry over into your pip value and margin cost. So that way you have the correct outputs there that way as well. And I'm going to set this back to the quote pair because I'll be trading with US dollar. The next is for units or lots. If you're doing MT4, you'll have to use lots, but sometimes with broker programs you can trade with units. In the case of Oanda, if you're using the broker software, they do actually allow buying and selling in units, which is also helpful for getting around the first in, first out rule. We'll talk about that more in later videos, but for now just select which style of contract you want to buy, either lots or units. And I'll use lots as it's the most common for now. The next is going to be, how does the margin count when you are fully hedged? Now, some brokers will count the margin as 0 if you're fully hedged, meaning margin will not count for either side, and you will only pay margin for what you have open. If you're trading with most common brokers, they probably have a setting of 1, and that's basically where you pay the largest amount. The largest position is what you're going to be required to have margin for, and the other position is just contained within that larger size. Now, if you're trading with two accounts, such as in the United States, and that's something I'll be doing here soon, you're going to want to set that to 2, and basically that's where the margin will cost fully for both sides and then be combined together. So if you have a .01 short and a .01 long, then you're going to have a total of $42 in margin, $21 and some change on each side. And so it'd be like $21.84 each side, so you have about $43 or so of margin with a setting of 2. With a setting of 1, you would only have a charge of $21.84 for margin because you're only required for one side, and 0 fully hedged, your margin would be 0 in that case. Now in the next up, we have the commission. This is going to be if you're using a spread only account or a some other type of account where you're not being charged commission, just leave this at 0. Otherwise, you're going to want to put the cost of 1 lot per round trip. This is usually available through your broker's charges and financing page. My commission for Oanda is going to be $10 round trip. And the next part also applies to the commission. Some brokers will charge it on open, some can charge it on close, but in the case of Oanda, they're going to charge it on both. So part of the commission is charged when open, and the last part is charged when closed. So that's going to determine in the emulator part when the margin and when the commissions actually get charged. Next up, we have swaps. Again, you can find this under the statistics in MT4 or on your broker's finance page if you're using their software. I'm not sure exactly where each one may list the details of their pairs, but I know most brokers will list these charges on their finance page. If they do happen to give you a dollar amount, this dollar amount is always in relation to 1 lot. So, for example, even though we have a rate setting in points of negative 7.3 points for for a long position, that would actually equate to $7.30 coming out of our account for 1 full lot. So in the case of having a dollar amount, just type that dollar amount in here, positive or negative. Make sure to include the sign with it if there is. The short will be the same. That'll be entered separately. And then right below that, some brokers will charge swaps on Friday for the weekend. That's the 3-day, 3x rollover day. It is for the charge of the weekend, but most commonly you'll see it charged on Wednesday. I don't have a setting if a swap is charged over time, but that is extremely rare, so I did not add that in to make this more complex for that part. And then below that just gives a total swap if you were hedged for points for your position. And next up, we have the time setting. We've already set everything here. This is kind of just for reference below the currency converter. But down here, starting out, you're going to want to set your UTC time zone. This is for the swap calculations to take place because everything does it by date. And the GMT time is actually set from your system time, so it actually adjusts backwards to get the market time. But set your time zone using the sign, either positive or negative, and how many hours of UTC offset you use for your time zone or your local time zone. And below that, if you need to make an adjustment for daylight savings time, you can type any number in here that you need in order to make an adjustment to the market clock output that you're getting. That way your time will match with what the market is showing. Now right below that, we have just basic calculators. You'll find most of these on websites or in apps on your phone and so on and so forth. But I went ahead and included them here because we're already using the basis for those calculations, and it would just be much easier to put these on here. Starting out, you're going to want to determine whether or not you wanted to use a percentage of the account for risk or if you want to use a set dollar amount for risk. And then you can type in your account size. We'll just say that we have $1,000 in the account and we can risk $35 a trade, and that will be 3.5% of our account, so that will show out that way. And then next we have our target and stop size. This is going to basically show us what size is the best to use for the trade. It's also going to work out the R ratio, margin requirement for that, the risk, and the profit based on these numbers here. And it's also going to give you a minimum required hit rate in order uh, to not be ruined. Basically, your risk of ruin. So let's go ahead and put in a target, say for example 60 pips. And then once you get the stop size in, we'll use 30 pips is what I like to use for the euro, between 26 to 35 sometimes. And then you see we get these outputs here. Anything in yellow is a box that you can modify, change, type in, or it may have a drop down. It'll have an arrow if it's a drop down. There's a few of these in there. Anything that is not yellow is typically going to have a formula or some other type of description in it. So they will show blank until you start typing into the yellows. For the example of this one down here, these two yellows will populate these values. So just keep that in mind going throughout. There's not many places that are yellow. Most of them are grayed out and automatically calculated. Now, the next part we have is the entry price calculator. Here you're going to select whether or not you want to make a long or a short entry. Let's say, for example, we wanted to take a long position. And in the case here, let's say we wanted to put a limit order in for 109 for a long position. Using our current target and stop size, it'll generate the targets for that entry position, so we'll know what prices to put in for the entry. So let's say, for example, we were going at like 108.93 for our entry because of a level there or something. So then you can generate those numbers quickly and easily for your position and just punch those in when you place your order. So that's the purpose of the entry price calculator. The single swap calculator will help you determine basically a single size position. So let's say we wanted to open a long position. Our best size here is a 0.11. So we'll pick our rate because today market day is Monday. So we'll need the 1x rate, and we're going to put that 0.11 and actually see that each day our typical swap cost for this position is going to be 80 cents. So that's one way to use that. If we were to look at a Wednesday cost, just pick the 3x, and now we're looking at $2.41 over Wednesday if we had a 0.11 position open. Now, the next part is kind of an extension of the single swap. With this one, you can basically combine all of your long and short positions. So if we were looking at like a 0.5 size on the long side and a 0.4 on the other side, this would tell us what we're looking at as a single rate, $3.65 for today, or a total rate of $9.55 charged on a Wednesday rollover. So we can do single or compound and figure out the swaps with just a quick calculation. Let me modify this color real quick to match the rest. And we're good to go there. And that's going to conclude it for the basic calculators. Then we're going to go to the other side real quick. This is hedging, compound, drawdown, and target table. This works similar to like an options calculator when you're looking at potential. So, for example, if we were looking at running a multiple entry strategy where we're going to have an average hedge stop of about 30 pips, and we're going to try to target between about 60 to 75 pips. So I'll start with 60. And this, we're going to start, we've kind of determined the maximum size that we want to work and build into, and a number of times that we can be wrong with whichever style of hedging that we're looking to trade. So we're maybe looking to add on 3 times, for example. So what we can do is we'll put our starting size in here. And then once you've filled in these 2 values here, you'll get a full chart. And starting on the left side, you have each level, each step, and what size it would be. So the first entry would be 1,000. The first time wrong would be 2,000. The second time wrong would be 3,000. Third time wrong would be 4,000 units. Or that's actually a lot. Let me put that. Let me make this the right size here. I forgot I changed that over. There we go. So now it makes a bit more sense. So if we decided that we wanted to be a maximum size of say 0.4, so you can see there's your max size here. And if you were to not make any forward progress at all, you got everything completely wrong. This would be the margin used on the account. This would be the amount of relative drawdown that you would have in relation to your starting balance. So, for example, if you started with $100, you would now have $82 in your account. Equity while holding those positions, of course, you would be overrun by margin at that point, but at a 50 leverage account. So this chart can actually help you make adjustments in your sizes based on your margin. Another thing it's going to show you is these are actually calculated based on pip value. So as you change these numbers up here, these numbers will change. This is basically going to be your distance to break even. So if we were going back to the example of using the 0.04, we would need 45 pips of forward progress, forward motion out of the price, be it a long or a short, whichever position we need to come back to. 45 pips of progress in order to reach break even. Now, if we were to use a 1R trade with this, we would be looking at a final gain of about $6. If we were looking to target double that size, so if we were to go 120 pips at that fourth level, then we'd be looking at $30 return, and so on. And each gray box on the end will also show the R ratio, and this actually takes into account of the relative drawdown and the break even in order to get a true profit out of the position. So uh, that's why you're seeing down here that even though it's a 0.6, that's 60 cents a pip. If we were to target 1R, if we were to target 60 pips, we would actually end up losing $9 and having a negative R ratio. And actually a negative R ratio because it's less than 1 to 1. In the case of looking that far down, you can see on this chart, if we were to go to 0.5, we would need 60 pips to break even, and that would be a all risk, no reward target. So if we were to go back and modify these, for example, use a shorter target size, or maybe even a smaller stop size, you can generate all kind of different numbers to really see what's happening with the account. There helps to basically explain all of this and help you out along the way too. Now down here you may see some errors. It only takes these three inputs here. If there's anything else that's not set in the settings, by the time of getting to here, you may see some other errors, but it's assumed that everything in the settings is already set before you start checking this. And now for the main meat and potatoes, the account emulator. Basically, this is going to fully show you what your account's going to look like, what's going to happen, and how things are going to change in various numbers: open, short side, your drawdown, your relative drawdown, and just so many different things that have to do with your account. And I'm going to go through an example to really show everything working, and hopefully this time it goes smooth. So when you first look at everything, you'll notice we have the market time up here. This is the current price, and this is the pair that we have set over in the settings. This section here is price and date. We have a current and a target calculation. We're going to leave that on current to start with. And over here is the last time things were updated, so you know how relevant and recent your information is. My information's about 17 seconds old, and it is 12/18/23, 4:56 p.m. on Monday here, and we're still market day. Should be changing. I think we might need to make an adjustment because that should already be. It should actually be 2 o'clock. Something's not correct here. So let's see. No. So we should be 2 hours into the day, almost. It should be 1:56. No, it should be, yeah, 1:56. That should be the correct time. Okay, so now it is Tuesday on the market. And so you can always adjust this to make sure. You just mainly want to make sure your timing is right there. I'm not sure why it's a little off today. And then next thing's coming up, you're going to have one value here in account details. Everything else is worked out of your positions. So let's say we're going to put in a fresh starting balance of $1,000. So now that populates and shows us what we have in margin required, free, as well as the total of all of our positions and our current equity. Okay, and going down the list here, the relative drawdown, this number is calculated in reference to the starting balance. So this number is usually going to be smaller than the true drawdown. The true drawdown is actually calculated between the actual current equity of the account and the highest watermark of the open positions of everything that we have accumulated up to that point. So over here on this side is going to show the profit and loss amount of the long side, how many positions are open, and how much margin is required for holding those open positions. Once we get some positions open, here it's going to show you the break-even price of all of the positions on your buy side, as well as how far away in pips you are from that break-even of that group of positions. The same thing will be the case over here for the short. We have our short positions on the right, long positions on the left. And that is where all of those numbers will be coming from. Now, let's go ahead and open up a quick position. So let's say, for example, we're using our current time. The current market price is 109.210. So we're going to go to the entry price and 109.210. And we want to open that 0.11 because we figure we want to risk about 3.5%. So let me do that there. And once you do that, do we have something else missing? I think I might need an open date. Nope, so let me see. Let me pause recording real quick and see what's going on with that. I literally just had this working. Give me just a moment, please. Okay, I've gone through and actually fixed several little bugs that are ahead that I ended up running into and finding along the way. There are about 600 formulas in this sheet altogether, so if you find any other bugs, just leave a comment below. I'm going to leave any updates to the file in the description of the video, so if there are any bugs, just once I get an update, just check back in the comments to get the updated version. One of the things I have gone ahead and fixed is the time zone, so now it is back working correctly. And I'm going to try to pick up about where we left off. So we have our open position, and we can see that it's already made a little bit of a gain that's going to equate into our current equity and our high balance. And while I've got this, I'm going to go ahead and cover closing this position if we were to want to do that. In order to mark it as closed, we would just simply put in a price. So right now, if we were to close it and take it at the current price, it would then account for that in our overall balance. And one thing you'll notice is there's a little red square here. That's to let you know that there is no closing date on the trade. If you don't put an open date on the trade and you don't need to use a closing date, for example, if you're just back testing and checking a few things. So because we have an open date, though, we have this little red dot. So we'll just need to type in a date, and I can use short form to do that. Just always make sure you're using the market time and not your current time. All right, and that's how you would close a position. Once you close it, it's going to gray out that line. So as you get more positions built in, as if you're, for example, if you're hedging or something, and you have several different small positions, whichever ones you close, it will gray them off and stop counting, and it will keep track of that in our emulation balance. One other thing I'm going to try to cover here real quick while I have it is, let's say, for example, you didn't want to close the full position. You only wanted to close part of it. Well, what you would do in that case, instead of marking the entire thing closed, you would just simply copy the information down below. 105, and let's say, for example, we wanted to close 0.6 of that. That would leave 0.05 open. So what you would do is, after you've copied it over, just go back and modify to show the part that you've closed, and that will keep things separated for us. It would also show the difference in the commission and the charges. Notice we have both set from previous, so now we have both sides of that set to charge for the full commission. So that's just a couple of examples on doing partial closes and full closes. I'm going to go ahead and open it back up, and I'm going to go ahead and put in another position on the other side. But notice how we've already picked up that relative profit with the gain, so that's going to reflect there. We have no true drawdown. I'm going to go ahead and add in our other position here. Let's say, for example, we had one that we took earlier, and it was a short position, but we ended up getting hedged. So now we have our setup with our new balances. Our high balance is 1,245. That's if we were break even on this and only had this trade. But because of the overall between the two, we have 35.97 down on the short side and 330 in gain on the positive on the buy side. So that's going to reflect here to show the current equity. And what we're going to do now is I'm going to show you the next part of this while we're looking ahead as well. Once you change this, you can look at either a current price, or if you're looking ahead or just looking at other prices, you can set this to basically any time and date that you like. Let's see, make sure I'm hitting the right one here. Okay. And let's say, for example, we're going to look tomorrow, and we're going to look at a different price. Let's say, for example, we're thinking it might go down to that's where it's off. Set that back to its original size there. Okay. And now we're back balanced. Okay, now we're going to look at this as if we were going to see what's going to happen with our hedge. Let me put in an open date for this as well. All right, and now we are looking at if price were to go down to this level at the 1079 at that target date, then you notice that we now incurred a swap fee for our trade we opened the day before, so that's accounted for. And also we have a positive swap for positive points on the short side. And these positions are now totaled together, and we're looking at a current equity of 968.31. Relative drawdown, that's always going to be in relation to the account starting balance. The true drawdown is the one if you're doing a trading challenge or something with a real tight restriction on losses and drawdown. The true drawdown is the one you're really going to have to pay attention to. Currently in this situation, we would have already failed the challenge. As you can see, we've gone at 12% of drawdown, so I know that's probably past just about every limit of trading challenge. So just make sure you use this and check ahead for your strategy if it's going to be able to cope with the requirements of the challenge before you go and find out that it's just too much and lose your money. So now we're going to take a look at things from this price, and we're going to look at closing out a profit and we're going to look to try to squeeze as one of our hedge areas to see if price was going to go up. So we want to try to find out our risk. The first thing we want to do is we have to match up our current equity. This has to be typed in manually, unfortunately, otherwise it would just constantly update and not work as intended. Now we've also got the messages here saying set the hedge equity. And let's say, for example, if it's not correct, if it doesn't match, it'll let you know that it's not matching, so you'll know just which situation you're under. You won't have to guess. So now that we've got that set, we now have to set our stop size and our exposure size. Our stop size, let's say we wanted to use a 30 pip risk. Now we need to set the exposure size, and the exposure is basically referencing what are we going to be closing. So and creating the out of balance width. So if we were to close this entire position of 0.11, then our exposure would be 0.11. If we did a partial close, like we talked about just a few moments ago, then we would basically just put in basically what we're closing out, because that's what we're going to be out of balance once we close that out. Now, you notice some other numbers finally appeared. Now, the no gain equity, this is what the equity is going to look like should we close this out and fail and not get any forward progress at all. And by closing this out and using a 30 pip stop, we are exposing ourselves to $33 in risk. And that's how you can use that to look at your projected exposure. One thing that to note is it's 10 cents a pip per 0.01 on the Euro USD, but other pairs may have different pip values. I think it might be useful to put a pip value here, so I'll squeeze that in after I finish the video. But for now, let's carry on. And what you're going to see down here is basically how far away from break even the account is, and how far you would have to go in order to reach this number here for your account high balance. So in order to just break even, if you were to expose and close out that 0.11, you would need 28.8 pips of gain in order to get the account to break even. So that is a useful number to have before you even close anything out, to know just how far you've got to go. That way you'll know if you're too small, and if it's a really short number, you'll know that you don't you can reduce the exposure a little bit. So that's one way you could get a little bit of better management on your risk exposure and trades, just by simply using these numbers here. And now, right now we're balanced, so we're not getting any different results out of this. It is showing the trailing hedge equity, so once we go and get out of balance, it's going to basically check our stop and our exposure against the current price, and it will tell us if we're trailing our hedge, basically what we're looking at as price moves up. Without having a chart, though, that may not be very useful, but it will basically tell you in relation to the current price, if you were to use that 30 pip stop off the current price, where your equity might be should you not get any more forward progress out of that. So let me go ahead and close this out here. So I'm going to mark the closing price of what we're targeting right now, and then we'll move it forward just a little bit. And notice we have the errors on this side, so we're going to have the 20th, which is today's date. I use a long form there, so you can see that it works with just about any form of date. It will automatically convert that for you. So now that we have that closed, we've got our full commission charge in, everything's registered, and we have our updated balances. And now we have our exposure giving us the information for what's going on with the position currently. So right now we're looking to protect short for 0.11 because we are exposed open for by 0.11, which you can see here as well. And we are 120 120.5 pips off the price, we would need to get back to our entry price for break even. Let me see, we should be good to go. I may need to take a look at this here real quick, but let's see where we are. Break even price, yeah, that looks a little incorrect. We need, no, it might be correct, hold on. Yes, that is correct. So this is the break-even position of what's in this table. This will count what's in this table for what's open. That is 120 pips to the high balance. That's 120.5 pips off, but we only need, because of our other position, we only needed 91.2 pips. So yes, that is correct. Those are the right numbers. Whew. And then, okay, so going back on where we were, we're looking at 108.193 to be the break-even price of the account. So, I think that should be right. We need 30 pips. Yeah, we need 30 pips. So 108.193 would be the break-even. And for the current day, if we were to let this roll to the 21st, because right now we're looking at the 20th, it is a Wednesday. This is showing that if we have a long position but no short, the current setup will incur $2.41 roughly of swap. So that's useful to know of what you're going to be, what you can expect looking ahead. And this will show you basically where we need to go to break even based on the current position. So it shows 108.193. So let's go ahead and double check that. 108.193. And yes, we are right back to the current equity. So that is helpful in knowing exactly where price is with your positions in relation to your starting balance. This can hold up to 40 positions on either side, so you can actually use this for back testing. Like, for example, with TradingView, I know they just do buy and sell, and if you have a long position and hit sell, they will close the long position. So this calculator can actually be used for tracking and looking at back testing with TradingView and hedging with back testing on TradingView. This will also do a little bit better job at keeping up with your costs. Excuse me. Now, moving on to down below, we have the standard trim calculator. This is something that is shown on another channel. The Hedge, the Forex Hedge, originally made something like this. And what I've done with it is it was originally factored for units, and then rounding was used. I actually made a calculation so that when you're using lots, for example, which is what I'm using in the video, let's say, for example, you made a $13 profit, but you are looking to close a 0.03 and trim out of that, but then you had a loss of 15. So right now it's only showing 0.02. We're not keeping anything out of the trade. We're trying to close as much as possible. If you wanted to keep a certain amount, you can type that in here and it would adjust everything naturally. But one thing you'll notice is if we made just a little bit less than that, we unfortunately would keep less than what we wanted to keep in order to close out 0.02. So it makes that adjustment and changes it to a 0.01. But it will also mean that you're keeping just a little bit more of that trim versus not keeping any at all, and in which case you would still have a little bit over $3 left because only $10 could be applied to this. You have a 0.03, that's $15 in loss. So that would mean each 0.01 is worth $5 each. So for $12.99, you can only buy out 2 of those, so that would leave 1 remaining. Okay, so this will tell you how many you're closing, and I think I need to There we go. I get the right formatting on there, and we have 1.01 left. So that would be an example of using that. Now you'll notice I've also got this balance here. This is a calculation of the balance from the account starting point, and this number is also the same as a winning trade. It can be used as a winning trade, but let's say, for example, you wanted to reduce swaps. You could take this $100.31 of profit, and you can take any number, like for example, if you had short and long positions up here, and you were thinking price was going to go long, you could maybe think about trimming out some of your short positions. So you could pick any one of your short positions and use the balance for trimming with that short position and trim that out as well. And then you have a relative amount that you could then come up here and start changing your exposure and determine your risk with, and work out how you may want to plan to squeeze out by creating an out of balance situation without actually taking any gain. So there's a few different ways that you could actually use that trim application, and I just included that number there for easy reference, so you don't have to come up here and think about this, that, and the other while everything is still moving. This will just take the numbers that matter and leave it right there for you to use. Now, last on the sheet, you'll notice I've got these totals down here. This is mainly just for bookkeeping. One other thing for bookkeeping that I have to mention is, for example, if you were to make any deposits in your account during the course of the trade, or any other type of windfalls, the broker maybe gives you a bonus, or however, whatever happens, if you incur any kind of gain whatsoever that is actual money going into your account, then you would actually put that here. So if you deposit another $25, then you would put that here, and it will adjust both your current equity and your current balance. Now, on occasion, you'll notice, especially with swaps sometimes, like for example, I'm using Olanda. They can vary slightly by about 10 to 20 cents per lot, and that I notice this is most commonly happening on Fridays. So occasionally you may get a few cents off on your actual high balance equity versus what you're actually seeing in your real live account if you're using this calculator to basically track your live trades. So, like for example, if they charge $7.28 for a Friday swap, for example, then basically, or let's say they were swapping long and they charged you $7.16. So that means that, or $7.46. Let's say they charged you a little bit more. They charge you 16 cents more to close out on Friday. So that would be $7.46, which would make a difference of 16 cents. So in your live account, you would actually see 111.18. So in order to make that correct, you would just put a negative 16 cents for the difference. So I'm using negative and not equals. On 25.31. This is one good reason to have a calculator. Let me see. I said 18, 125.18, 125.15. A little off. But that way, but if it was, so if you wanted to make it 125.18, then you have these as reference, so you don't have to scroll back and forth. But then you can use this equity and balance adjust section to make your current equity and your current balance match what is in your live account, with the small adjustments as you make them along the way. And that will equate to roll into these values up here, which will then roll out to these values here, which will then be figured and all wrapped together. So everything is kind of woven together. Even if, so now you notice here as well, so like if you're above your break even, well, your equity is positive, there's nothing to calculate. But it will still keep up with that trailing hedge equity if you were to come 30 pips off the price. Okay, so that is using basically all the different features of the account emulator, and I am very happy to see that everything came out to the correct numbers, everything worked properly. And once you actually get finished up and you've made a full round of trades, you can actually come down here and look at the totals for your trade all around to know just how well each side did. This is also kind of a useful section if you're running two different accounts. It'll basically let you know where you are in P&L and commission, but it does not have enough in it yet to track the equity actually of both sides. That'll be something else I'm going to add in a little bit. It's probably going to take me just a while to get that worked out because I've got to weave it into everything else that's already working without actually causing corruption in what's already working. And just like the other sections, we've got question marks. So this will explain each little section as you go. You don't want to hit delete while highlighting this. You can delete it, but of course it's going to make everything wrong and give some issues. Just always make sure you have something set to make sure that these numbers are correct. And then, of course, if you ever need help, I try to explain everything in the question marks along the way to let you know where you might need, what you might need to do to get that working. But that concludes the video for the Hedge calculator and position analyzer and emulator. Be sure to follow me for more videos because I am definitely ready to get back in the swing of things with making those. And I really hope you get some good use out of this calculator. I'm very glad to actually make it through a video and a non-video time, actually all the way through without any errors, so that's a very good sign. But again, like I say, I mean, if you notice anything wrong with it at all, just leave a comment and make a note below, and whenever I see that, I'll do my best to try to immediately get it fixed up and get a new copy uploaded, and that will be in the description of the video. Thanks for stopping by and grab your copy. Make sure, like I say, to always make a duplicate and always make sure you have one sheet for each pair. It may also be a great idea to actually make different books for different pairs because even just these two sheets alone, we've already got quite a lot going on. As the video is getting created and rendered, I'm going to tidy up a couple more things and get a blank sheet ready and get everything uploaded and ready to go. So we'll see you on the next video. Thank you very much.